The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 25th. How about that, folks? Already November 25th. It's the marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a incredible weekend. Thanks so much for joining us. Let's go look at one of our tools. This is the tool I call Thanksgiving should really be thanks living. Thanksgiving, folks, it centers on the things to give thanks for. And more importantly, a grateful mind is a great mind which eventually attracts itself to great things. You know, it is the attitude of gratitude that opens the door to abundance in one's life. Thanksgiving, folks, Thanksgiving, if lived on a continuous basis, not for just one day, can create more good in your life, and that's why Thanksgiving should really be thanks living. And thanks living, folks, it's a way of life. No matter what circumstances you face, no matter what challenges that lay ahead of you. You see, perhaps the most difficult, yet the most powerful of all, is to give thanks for your problems or your challenges. The reason is this: as you face your situations and overcome them, guess what? You become stronger, you become wiser, and you become more compassionate. Something to think about. You know, one way to learn mathematics, think about it like this. When we were learning math, one way to learn mathematics is what? Is to be given a problem to solve. Something to think about. One way to prepare for an athletic event, well, it's to practice with a strong opponent. How about take today's opening? You know, Monday's opening is with the Olympic, the ice hockey team beat the Russians. You know, they played against the Soviets, and they got their butts kicked in a practice session. It wasn't really practice. It was played at the Garden in New York out there. Truly got their butts kicked. Of course, when it came time to play them in the Olympics, they beat them. Something to think about. You know, an ancient proverb says this: a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. Look, sometimes we feel the weight of our circumstances and lose sight of the precious nature of the many gifts of life. Adversity, when overcome, it strengthens us. And therefore, we are giving thanks not for the problem, but for the strength and the knowledge that result from our experiences. Perhaps we should give thanks ahead of time, for we will grow, we will get stronger, and we will overcome every challenge we face. Folks, Thanksgiving, it's really all about thanks living each and every day. And thanks so much for living with us here at TFNN. We are so grateful that you join us each and every morning. Let's go check out these markets right now. We've got Dow futures up 61 points. They're trading out at 16,088. S&P futures up 5 1/4, trading out at 1806.50. NASDAQ futures up 13.5 points. They're trading at 3433.50. Russell 2000 up 3.5 points, trading out at about 1127. You've got King Dollar up 23 ticks. That's trading out at 80.98. So we've got some currency in the currency marketplace. We got some. Let's say currency. We've got some movement in the currency marketplace. Same thing in the with gold and silver. Gold right now is back $8. It's off of its session low. Same thing with silver. nearly unchanged right now, trading out at 1984 after hitting its .786 retracement level. We'll take a look at that. You've got light sweet crude off a buck right now, trading out at 93.80. A quick peek around the globe, what we'll see out here. The DAX in Germany up about 0.9%, up 81 points. The FTSE, we want to go check in on that. It's only up 0.3%. Struggling is trying to get over the 2007 highs out there. It is up 20 points right now. The Nikkei was up 237 points last night, 1.5%. The Shanghai and the Hang Seng, both of those were off. Well, really, the Hang Seng was basically flat. It was down 11 points out there. Our call-in number, 877-927-6648. If you get us a call, we would be happy to field it, take your question, help you out in any way that we possibly can. Let's see, where do we start? Let's go take a look at gold and silver out here first. As we take a look at gold right now, traded out at $12.35, as I mentioned, off of its session low. Low so far, $12.25.70 out there. Trading now into the, let's pull this back just a bit here. We take a look at our, it finally hit the June 28th swing point, the high of which is $12.34.80. You're trading at $12.35.20. You close inside $12.34.80 today, and we will see a test of those lows at the $11.79.40. Volume there, about 260,000 contracts so far this morning at lighter volume on the way back, but it's all going to be the key here. One of the keys is going to be where does Goldilocks close today, and what's the volume as it moves down. It is moving into the sold condition out here. If we take a look at that 14 period relative strength indicator out there, so today's going to be an important telling session in gold. If we go take a look at silver, see what it is doing here. As I mentioned, it's off its session lows. It has hit the .786 retracement. Now, the retracement that I'm referring to comes off of the low from June 28th. That's at $18.18, all the way up to the high that was put in here on August 28th. That's up at $25.12. The exact .786 number, 1967. What it actually got down to was 1957, 10 cents below that level. It's off of its highs. It has not got, let me see here if it actually tagged the June 28th area. 1963, yeah, it did. So it actually tested that swing point as well. So today's going to also be a telling day for silver. If it closes inside 1963 today, then what we'll see is a test of those lows, or we should see a test of those lows around the 18-ish mark out there. So hi-ho silver and gold now having tested the swing point low. We'll see if it can reject it on price and reject it on volume, then setting up a potential bounce out there. In the case of silver, the bounce would take you up into the area of, let's take a look at it. If we assume that today's low is the low of the session here, you're looking at a bounce that would take you up to about the 21.75 mark. That would be the area where it would also run into a little trend line here. That's the black line coming off of the highs here from November 29th. That would be a area of resistance. The red line as well, that would be a nice bounce. However, that is also longer-term channel line resistance out there. That's quite a bit higher. That is much higher than the 21.74 level. In fact, that's probably around the $24-ish range inside of silver. Let's go take a look at the potential bounce inside of gold out here, if in fact we can see one. And that's going to be a bit. That's much easier for it to get. Let's take a look at retracements here from the most recent high. That would be the October 28th high around 1361.80, down to the low so far this morning. So your bounce on gold could take you right to about 1310, which is your .618 retracement, assuming that it can reject this June 28th area. Let's go take a look in. Let's still stay in the commodity sector here. Let's go take a look at light sweet crude. See what it is doing. That is trading out right now off $1.23 out at 93.61. Let me see, what's this black line out here represent? I'm not even sure. Oh, that's the primary. That's the largest number of co-located opens and closes right in this range here, right around the 93.15-ish mark. So far, it got down to 93.08 and has held that level. You can see this little descending price channel that light sweet crude is traveling in. It tried breaking out. If you're watching us on TigerTV, you can see it. If you listen on your radio or your mobile device at TFNN.mobi, thank you so much for doing that. All that I'm doing here for this channel, this very narrow banded price channel out here, I'm using the open from the session of September the 9th. That was out at 110.28. I'm using the close of September 18th. That close was 108.24. That'll set up your channel line because it'll run right into the open on October 17th, right at 102.13. We can see that Light Sweet Crude had tried to bust out of that area on Thursday, tested it actually on Friday, stayed out, but we're back inside the price channel, so it's up against a horizontal level of support. If it breaks through that area, if we just simply take a look at retracements off of its most recent swing point low, taking you back to April in 2013. Seems like a long time ago. 91.31 would be its next stop. That would be your .786 retracement level. I suspect that area would fail, and we would see Light Sweet Crude move all the way down into that 85-ish. At least test the swing point from April the 18th out there, the high, which is 88.51. Let's stay in this area here. Let's take a look at bonds. Bonds here this morning, just moving sideways, so no real movement here inside of bonds. They really have formed at this stage here an A to B equals CD down, taking us into the 128, 22-ish range out here. Natural gas, if we take a look at the January contract, natural gas here moving higher. It has now run into resistance. We'll see how strong this has been. This is the January contract, but if we go take a look at the continuous contract, we'll see the same line of resistance, this descending price channel. That is the red diagonal line up at the upper portion of my screen, or the top line of my screen. As we take a look at it, you can see as natural gas got up to a high this morning of 389, it has run into that area now. A real break of this descending price channel. You would see natural gas get above it, maybe stay above it, come back and test it, reject that area, and then begin to move higher. Then you would see a real breakout. And I would say that the lows that were put in all the way back here in November 5th, out at 352, that could be the low during this seasonal cycle. And it is a little bit frigid out there, I suppose, in most parts of the country, not so much so here in Florida. So if you are out traveling, there's going to be a lot of folks out traveling. Be careful because, there's going to be snow and sleet and rain and stuff like that. But if you want some nice warm weather, just come on down and visit us here in Florida. We would love to have you, probably many folks, coming down here to celebrate the holiday season. Now, let's go take a look here and see what's going on inside of the futures market. Let's take a look here at the, let me see here. Give me a moment. Let's take a look at, let me pull this up on my screen here. Let's go take a, since the week did end last week, let's go see what we've got going on. And so, well, this is the weekly chart here for the NASDAQ composite, which, as we know, had shown some weakness out there. That weakness really was erased last week. Now, the candle that was formed last week, not using a strict criteria candlestick, but we had a little doji candle as well as a little hanging man. There's no way, we talk of, well, I don't talk about it too much, but folks think that a hanging man is a bearish reversal signal. You show me anything bearish about that candle, folks. It closed at its session highs out there. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and you've got the metals mining conference going on in San Francisco. I know our man Tom is out there growling and prowling, so if you're at the San Francisco Marriott Marquis, stop by, give him a nice big hug out there. Kind of an interesting day. I know he goes to these conferences, and oftentimes they mark either lows or highs, I believe, in the marketplace. So it'll be interesting to see if today, tomorrow, does create some type of bottom out here inside of Goldilocks and silver. Now, we left off here. I had the NASDAQ composite chart up on my screen out here that had been struggling out here. It's the weekly chart that we're looking at, but it is up and over any kind of resistance area. Now, there was a little hanging man, not a bearish reversal signal. We did have a doji candle out here. That says that the close of last week, 33.90, well, really the high of last week, that high is 39.94.97. So long as that area gets cleared this week by the end of Friday, no resistance overhead inside of the NASDAQ composite. But let's go take a look at the actual futures contracts out here. Again, we did end the week. So let's go see what the message for the week is. Let me just erase a couple of things off of this chart out here. Get rid of that. There we go. Okay, we're good. So if we take a look at it, you can see here last week also forming a hanging man candle out there, but it's not a reversal candle. It's really as simple as that. It comes at highs out here. It looks like a hammer, smells like a hammer, but doesn't act anything like a hammer candle out there. And you can see here and take a look at the weekly chart for the S&P 500. It is in strong bullish mode out here. If you take a look at where is there an area of support, well, that area of support really comes all the way back to the September 27, 2000 level. That formed a bearish engulfing. We had a close a higher once it closed above the prior candle, because that was the week that it engulfed. That high was at 1726.75 out there. That gave you your little breakout. Did form this little doji candle right here the week of November the 1st. Again, once you got to close above that, that just confirmed prices moving higher. You can see we're in the super bullish mode here of the Stevie indicator, the momentum indicator out here. So things look good. We'll give you a price projection maybe during this segment, next segment. Right now, I just want to take a look at each of the charts out here for the weekly basis. Let's take a look at the NASDAQ futures out here. There we go. Let's see what it did. It also had the hanging man feature out here, but it is up and over any kind of resistance. We identify where is the level of support. Man, and this thing is so far above. You have to really come all the way down, in my opinion. You have to come all the way down to the shooting star candle from May 31st on the weekly chart is what we're looking at inside of the NASDAQ futures, the top of which is 3,036.75. So for an area here that has been, let's say, maybe holding back as of late, it's in long and strong. It's in the super bullish mode of my indicator out here. We take a look at the Dow futures. Let's see what they did here last week. Nothing more than positive candles. The support inside of the Dow is now going to be the high of the weekly session, August 2nd out there. Dow futures, that's at 15,600. Right now they're trading out at 16,068. So it is well up and above any kind of resistance here. So the Dow has got freedom to run as high as it wants. Let's take a look at the Russell 2000. Let's go see what it did here last week. Russell 2000 also had been a bit weak. Formed a little hanging man candle last week. The key here was for price to close above the evening star candle. That's a 3-candle configuration. That includes the week of October 18th, the week ended October 25th, and then the week of November the 1st out here. The actual high of those sessions, let's see, the prior week was 1120.50, and then we're looking at 1123 is the number, and we did get a close above 1123. Last week the actual close was at 1123.60 by 60 cents. That's all it needed to do was to get above its resistance out here. So this is in the long, strong mode. Again, this is the Russell 2000. This is the weekly chart. So remember, a weekly chart's going to give you a better trend than a daily chart is going to provide us. But we can see here, quite frankly, coming off of the lows, this is how strong it has been inside of the Russell 2000, even along the way as it has given us some reversal signals out here. Those reversal signs on the weekly chart were nothing more than caution signs out here. And that is really coming off of the lows here all the way back from a year ago. The week ended November 16th, 2012. 877-927-6648. Dow futures up 56 points right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 26 points, trade out at 16,090. S&P up 3 points, trade out at 1808. Composite up 14.5 points, trade out 4,006. Russell 2,000 up a couple points, trade out 1127. Apple up $2 and change. Microsoft up 27 cents out there, having a big weekend, a big first day with that Xbox One. You've got Google's up $7, Cisco's up 2 pennies, Intel up 10 cents. Leading the charge, the upside, dollar-wise, is Cubist Pharmaceuticals. CBST is its ticker symbol. It's up $3 and change, up 5%. Vauxhall Jet having a nice little bounce out here this morning. It's up $3. Of course, this thing really got whacked out there. DaVita Healthcare, DVA, is the ticker symbol. That's up $3. $3.50 up about 6%. Amazon is up $2 this morning. Fresenius Medical, boy, I don't know if that I could possibly pronounce that, but it's up 7% here this morning. FMS is the ticker symbol. Tesla's up $1.80. You got Celgene up $1.42. Baidu up $1.11 out here. To the downside is Kihu 360 Technology off about 6% this morning, down to almost $5. Unipixel, UNXL is a ticker symbol. They're down 20% this morning, off $2.70. The ADT Corp is off $3.50 right now. IBM down about $3 right now. IBM struggling, running into that wall of resistance out there. Randgold Resources off about $2. You've got Boeing down $1.42. Qualcomm up $1.22. Again, our call number 877-927-6648. Give us a call, folks. Would be happy to take a look at your stock chart out here. Let's go take a look at the Euro Japanese yen. Let's go look at it on the longer-term time frame. Then we'll take a look and come back to this 30-minute time frame out here. That is, where is it? Right here on this chart right here. As we take a look at it, give me a moment. That has broken out of its consolidation level right now. This morning here, completing the 1-to-1 A to B equals CD up. That's in the 138.12 level. Got up to a high of 137.97 out there. So that's the completion of the 1-to-1 A to B equals CD. And that A to B equals CD is coming out for the swing point low from August the 12th. That price is 127.95. B point on this is going to be for the A to B equals CD as the September 20th high out at 134.72. Pulls back, does a shallow retracement out there, gets down to a low of 131.12 out there. So it completes the 1-to-1, but what it's really also done, it's broken with conviction this consolidation range that it was traveling, and that actually says that what this should do is a 1-to-1.272 A to B equals CD up. That will take it to the 140 level. That'll be a nice little piece of energy for our markets here to be able to move higher. Now, on an intraday basis, it got into the overbought condition. If we pull this back here, this is the if we take a look at this is the 30-minute chart for the Euro Japanese yen. Really got into an extreme overbought condition. It has been working itself off there. Been doing pretty good about it. It's possible setting up an A to B equals CD down, which would put just a bit of pressure on the market out here. If we take a look at the A to B equals CD down on this, your A point would be coming in at 230 this morning. That's at a price level about 137.96. The B point that formed here down at 6 o'clock this morning out at 137.36. So potential A to B equals CD down, which would put a little bit of pressure on the U.S. markets. We'll see if that's the pattern that it turns out to be here. But on a larger term basis, on that daily chart, on a weekly chart, what we have seen is the Euro-Japanese yen break out to the upside, and that bodes well for the markets here. Let's go take a look here at the other currency pairs. Let's go take a look at the Queen, see what the Euro is doing. On a daily chart out here, we know that the Euro is up and over a significant resistance area, really has acted as support now, and that is the price level right around 134.14 out here. So that should be good support for the Euro. That says that price ought to at least bounce. Let me get rid of a couple of things out here. Let's take a look at where that bounces. Now I'm coming off of the swing point high from October the 25th down to the low that was put in on November 7th. Looks like it's really more likely forming an A to B equals CD up. That A to B equals CD up pattern. Then we'll take a look at an intraday chart. Would take the Euro to about the 136.80 to 137.57 level. That is on the daily charts that we're looking at. Let's go down into an intraday time frame and see what the Euro itself is doing here. It's a Euro US dollar. There we go. It had formed a little bit more than a 0.786 Gartley sell pattern. Now, that Gartley sell pattern, that did come in. It did form here at about 8 o'clock in the morning on Friday, November 22nd. But what we can see here is that level was taken out with some pretty decent conviction behind the move at about 12 noon on Friday. Now we're just seeing just a pullback. You can see it got into the extreme sold condition. Did that at about 5:30 or 6 this morning. Now what we're seeing here is a price relative strength divergent pattern without follow through. It's doing it on less relative strength out there. That's actually a bullish pattern. So if we take a look at here's what I'm referring to if you're watching us on Tiger TV. Let's just draw it in. We're taking a look at the Euro at about the 5:30 a.m. time frame on a 30-minute chart, moving down, getting into the RSI down to about 28.33 out here. That's on the 14 period. Goes ahead and makes a lower low. Does this at 9:30 this morning, but it's doing it on less relative strength. You've got this little divergent pattern that is out here. And what we're doing now is just really waiting for a reversal signal. That reversal signal would be a bullish candle. In this case here, this could be your bullish engulfing candle. That would then suggest that, okay, the move to the downside would be over. And if we take a look at the retracements, let's see, we're going to take a look at two retracements. So it's done the point as it was hitting that lower low on less relative strength. The 0.618 retracement, that's coming off of a set of swing points from about 11 o'clock last evening. Is it last evening? November 20. No, that would be Thursday, 11 o'clock, 23. 11 o'clock in the evening on Thursday night. So if we go from that low, that price point is about 134.61 up to the swing point high that came in at 5 o'clock on Friday out at 135.55. You can see it's made the 0.618 retracement. So it's done that really well. Now we're just waiting to see if we can get a bullish candle that confirms here coming into the 10 o'clock session. So still another 19 minutes or so left in that. If we do get a bullish engulfing candle and we get some additional follow-through to the upside, that says that this is probably set up the A to B equals CD up inside of the euro-US dollar, and it would look something like this pattern out here right now. But we want to wait for confirmation of that. That would take you all the way up to the make 100% move, actually get a little bit beyond that. But what we also have out here, and really the point that I was going to make earlier, is we had a confirmed 0.786 Gartley sell pattern, and that pattern failed. And when a 0.786 Gartley pattern fails, whether it's a sell or a buy, in this case here, it was a sell pattern. When they fail, they turn into butterfly patterns. And that butterfly pattern in this case here, if we go take a look at what that price projection is, and the butterfly pattern being the 1 to 1.272 or 1 to 1.618, that says what the euro is likely to do is make a move up to about 136.25 out there. And this pattern that we're looking at here right now on the 30-minute basis is the one that's going to give us a confirmation as to whether or not that, in fact, is going to occur. So from a bullish standpoint here with the euro moving higher, we've got that because it made a lower low with less relative strength out there, and that's just not the way that it typically works inside of any marketplace. Let's take a look at the Great British Pound, U.S. dollar. Let's go see what it is doing out here. Let's take a look at its retracement now. This looks like it actually formed the 1.618 butterfly pattern, butterfly sell pattern. Let's go mark that in. We're going to use the swing point out here from 10:30 in the morning on November the 20th. Come down to the low at about midnight on November 21st, and the 1.618, looks like I got a stretch. Looks like I have to do a little scrunchy here. Looks like it was just shy of making that, made about a 1.5. But let's see where the actual 1.618 expansion of those sets of swing points were. Right here at about 162.4. It did not make it all the way up there. It got up to 162.2 out there. So not too shabby, not too bad. That's inside of the Great British Pound, U.S. dollar. Now let's take a look at the retracement that it has done thus far. That means coming off of the A point of the A to B equals CD all the way up to the high that was put in. And looks like that actually could have a little bit lower to run, maybe down to about the 161 level. That would be your normal move, your 0.618 retracement area. You can see that it, too, is trying to form a little bit of a bullish engulfing candle. But let's see if this is doing the same thing, though. Let's put up our relative strength, our 14-period relative strength. And so in this case here, we do not have this confirming a divergent pattern as we did inside the euro, because what we can see here is a low that came in at 4:30 this morning as the Great British Pound got down to the 161.8 level. But as it made this other low right here, relative strength is about 31.79 versus up here it was at 32.23. So it's actually making a lower low, pushing it with more relative weakness in this case here, even though it's called the relative strength index, but really with more relative weakness. So in this case, this tells me that the Great British Pound U.S. dollar is more likely to run to a lower price. And if we take a look at the A to B equals CD pattern on the 30-minute chart out here, it would look just like this. And that's so at the point at about the 1 to 1.272-ish, the 1 to 1.618, A to B equals CD down. That gets us to about 161.4 or 161.2 out here. It looks like that's really where the Great British Pound wants to head to. I think let's go take a look at the U.S. dollar, Japanese yen. Let's go finish off that currency pair as long as we're going through the currency pairs here in detail. This wants higher price out here. So you've got the U.S. dollar, Japanese yen. It has made the 1 to 2 A to B equals CD. That's at the 101 to 78 range. Let's take a look and see. This has formed a butterfly pattern out here. Let's try to draw this. And this is coming off of the September 11th. This is a daily chart that we're looking at, the high of 100.59. We're going to go down to the low of October the 8th. Let's see. Do we have a 1.0? No, we got about a 1.272 butterfly pattern that it was forming out here. But these candles, take a look at these bullish candles that have come in here, really says what it wants to do is more likely the 1.618 butterfly cell pattern. That'll take us up to the 1 to 2.618, A to B equals CD. That's up in the 103.28 type range out there. That is on the U.S. dollar, Japanese yen. Now let's take a look at some of these stocks here that are popping and dropping. Let's go take a look at Pioneer Natural Resources. That is the leader in the clubhouse on the way down. PXD is the ticker symbol, so let's go see if there's any kind of volume behind its move out here. PXD. Let's see what it is doing here. Let's pull this back. It's trading down about 3% off $5 and change out here. So it has taken out a swing point. That swing point was from November 12th. That had 2.4 million shares. You're trading below it here so far with only 200,000 shares in 17 minutes of trading. I can't do the math that quickly in my head on that. But what we do have in Pioneer Natural Resources is you have this high-volume downdraft bar from November 7th. That says that Pioneer Natural Resources should come back to the breakout area. Its most recent breakout area is what I should say, and that is from August the 1st. So you've got an open gap. The July 31st high is 156.92. The bottom of the gap, meaning the August 1st candle, is at the 169.51. So that is where it is headed to. We take a look at just normal retracement. Let's see if that happens to line up with the gap out there. And it most certainly does. So your 0.618 retracement level. Now, this is coming off of the lows back here in April of 2013. 109.73 is the number. So if we go from that low all the way up to the high that was put in here on the trading session of October 21st, that was at 227.42. 154.69 is your 0.618 retracement. That takes you right down in the gap. If you can get down there and the volume starts to dissipate, what this might set up here is a little bit of a Gartley buy pattern. Let's go see what this might look like, see what kind of expansion of swing points. Yeah, so right inside that range becomes your Gartley buy. That is on Pioneer Natural Resources, and that assumes that now on the pullback that you start to see volume dissipate. So the range for Pioneer Natural Resources right around the 156.27 level. That would be a nice little buy because you'd have a 2.618 expansion. I'll get rid of the that first Gartley that I drew out there. Let's draw the second one in because the second one here has got really nice Fibonacci numbers out here. And so you've got the 0.618 retracement, a 2.618. Let me get rid of this and we'll clean this up a bit so you can take a look at it. And that's really, even though you don't have this tool, what you can do is just make sure that on your Fibonacci retracement and expansion tool, you've got the areas of 382, 618, and 786, but you want to have expansion of 1.272, 1.618, and 2.618 out there. And then you can mathematically just take a look at from low to high of swing points, high to low of swing points, and you can come up with an area where X marks the spot. And inside the case of Pioneer Natural Resources, 156.37 is your 2.618 expansion of your BC. It's also a 618 retracement, and it also comes right back into a breakout session from August the 1st out there. That might set up a nice buy as long as you get some nice light volume. Right now, the Dow is off 4 points. S&P is up 1. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 5. S&P is flat right now. It's up 80 cents. Composite is up 450. And if we go back and take a look at the euro U.S. dollar, so we're looking at it, and at that stage, it was forming a bullish engulfing candle. Now we're 6 minutes left to go in the trading session, and that is not the candle formation that is out here. So even though we've got this price relative strength divergence out here, it doesn't confirm until you get the reversal signal, and we do not have that here yet. So we'll continue to monitor this pattern here. That's why you wait. You want to always wait. You know, when you take a look at different trading patterns that are out in the marketplace, what's really key here is waiting for the actual reversal. So in this case here, with a market that's moving higher, we took a look at the weekly charts for the indexes during the first hour, the first or second segment out there. We took a look at the weekly chart, which is going to have more of a is going to have a more important trend versus the daily chart. out here, and this is how you really put it all together. But what you want to always do is you want to wait for those reversal signals. You know, the pattern is one thing to set up, whether it's an A to B equals CD, whether it's price relative strength divergence, whether it's a Gartley buy sell, whatever it is, you always want to make sure, and you want to wait for a confirmation of that pattern. And the easiest way for that to occur is going to be through some type of bullish or bearish reversal candle signal in the marketplace. The market is always communicating. The bulls and the bears have to show up for work. They paint signs for us all the time. All we have to do is read those signs. They help us to identify areas of support and or resistance out here. Let's see. Question in the den. I'll have to look at it maybe during the breakout there. But the question was, why did PXD jump out at me this morning? Just showed up on my list as Pioneer Natural Resources being the first leader to the downside off $8 this morning. Not sure if that answers Z's question, but if not, he'll write another question for me. We've got Lumber Liquidators. That's also pushing to the downside out here. So let's go see what Lumber Liquidators is doing. It's down about 4.5% off $4 and change. Ticker symbol on this one is LL. LL is the ticker symbol. Let's go see what it is doing. Yeah, down with some volume out here on Friday, and looks like it's going to have some follow-through here today. Lumber Liquidators right now trade at 97.16. Let's go take a look at, it's down below a swing point here that was also a breakdown on September 27th. So you saw some selling, even though you had a green-colored candle, you still had selling that was really taking place on September 27th. You're below that. Looks like Lumber Liquidators is headed down to this next swing point here, which would take it down to about the June 24th time frame, somewhere around 71.63 to 77.59 out there. No A to B equals CD, just simply breaking some swing points, breaking it with some volume. It says it should head down to the next swing point low. So what is it that we're going to focus on and pay attention to today? Well, let's go take a look at the summation index out here. I didn't get a chance to update that. But let's go take a look at the New York Stock Exchange chart anyways. I knew there was something I was supposed to do, and I forgot about it. If we take a look at the New York Stock Exchange, nice bullish move here last week. The three drive to a top pattern, the high of which took place on October 30th, 10-127.63. As long as price stays above that, the New York Stock Exchange wants to move to higher prices. A very bearish pattern. It has failed. It has failed on a couple of different attempts. Right now, you've got the NYSE trading out at 10-196.53, closed inside the swing point out there, and when it closed inside the swing point on the weekly chart, said it wants to run to higher price. So really the setup across the charts out here is for higher price. And, man, time absolutely flies. Hey, folks, thanks for being here. If you're off to start your Monday, have a terrific day out there. Otherwise, I'll see you in just a few. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.